We see a lot of talk around interest rates, and of course, it's really interesting. Yeah. But we think it's time to start looking through that and start focusing on where are those growth opportunities that we can back today with that return potential coming.
Super. That's great. So you're sticking to your guns on that. But let me say that some sustainable investing has been challenged by the higher rate environment. Some of the business cases that were there have been more challenged as we've had higher rates around the globe as well. So back at you a little bit, maybe lower interest rates will perhaps reinvigorate some of those business cases.
Sure, maybe. And I think it's important to differentiate between, the different types of sustainable growth here. So you have that back-end dated climate opportunity that needs to come through those decarbonisation names, where we'll see those technology changes, those shifts towards renewable, etc., which are longer term duration in nature. But there are really compelling opportunities within sustainability today. So think of names like Schneider Electric with their data centre business, and the decarbonisation opportunity that comes alongside that AI shift, that digitalisation that's become so attractive to investors in the US. Well, there's other ways to play it. You can play it elsewhere on the value chain and think about decarbonising that process in doing so.
Great.
AI does have a lot of different ramifications, doesn't it? And that was the one takeaway message for me at this gigantic technology event I was at the other week, that a lot of CEOs are looking at how they deploy it. All the use cases are saying there are cost efficiencies. And without very much investment to be able to see visible cost efficiencies or to speed up certain targets towards decarbonisation, that is significant, isn't it?
Yeah, we see AI ramifications across the market, but I think you've touched on a really compelling point there, which is we do not know the monetization route for many AI applications. So we've seen, some of the very first derivative names within the US really see that growth come through in their share price reaction. But there's other opportunities to think about AI. We can think about names like Intuit, rolling out Intuit Assist, which is an AI-enabled software package. We can think about drug discovery. So within healthcare, some of the really compelling life sciences names can use AI to speed up that drug discovery process, take costs out of the system. And bear in mind, that's been a real focus for society, thinking about how expensive drug discoveries become, how can we make it more efficient and come to the market more quickly.
There's a timing issue here though, right? We don't know how AI gets deployed at scale and when that has company-specific reaction. So how do you place bets? Is it too early at this stage when we've still got huge market moves taking place in a handful of stocks?
Yeah, sure. So I think there's different scenarios that can play out. You can have a really aggressive kind of 800 billion market sort of opportunity where the adoption of AI in a monetary kind of model comes through as quickly as the internet did from 1999. Or, you can have a very different scenario at the other end of the equation where companies really do struggle to find that profitable way to back AI. So I would say, we don't know for sure where we're going to go. What we can do is try and invest behind some of those picks and shovels and think about, where we can back the trend rather than the specific mechanization.
So based on what you're saying, this isn't just a US story. It's not just concentrated around top stocks on the S&P 500 and the NASDAQ, that it is worth spreading your bets across other jurisdictions.
Sure. The US names, we talked about the Fab Four, I think it is now, really capturing that alpha narrative.
Quickly, didn't it?
Yeah, very quickly.
we didn't even bother with 5 and 6. We just went from 7 to 4.
But it just shows the importance of looking beyond the moniker and thinking about, what are these businesses doing? What is their free cash flow profile, their return opportunity?
Yeah. You're not looking at their EBITDAs.
EBITDA. No. So think about Buffett. What's he always said? Think about the cash, think about the returns. Where are those businesses with sustainable returns that can lean into growth?
You're right. I don't think Warren Buffett knows what an EBITDA is, does he? He wouldn't even bother, would he?
He'd move on pretty quickly,
I think he'd move on. Yeah. Sorry, please carry on. But beyond the US is what you were talking about.
Yeah, beyond the US, there's lots of ways to think about AI. I think it talks to how the market is captured by alpha narratives, like AI. And we see it also in GLP-1s. You covered the story about Novo taking Wegovy into China. And they are exciting, they are innovations, but they're not the be-all and end-all. And we need to look in the market beyond this, the area that's in tech, that's in GLP-1s, and say, well, actually, healthcare, there's plenty more opportunities that are mispriced, that give that compelling answer to some of the healthcare problems that society has today.